Hello YouTube. So welcome to the episode 2 of consistency series. As you can see from the last episode, we don't have a lot of people interested in this series, but I will continue anyway because I just feel like it's the right thing to do. Alright, so first I'm going to show you my one of my trading section, line execution, and then I will break down a little bit about my thoughts behind the process and a lot of and from that line execution we're going to use that as an example to move forward to talk about Thai stop loss and why stop loss, and we also talk about another topic like YouTuber and trader and influencer stuff. And then we're gonna talk about very interesting topic, which is where the two consistency line in and what we should focus on to actually train for that. We talk about consistency all the time, and is it just basically just risk reward, risk management, psychology, and stuff, or there are more to it? We're gonna dive into that. And the next one is process orient, oriented versus goal oriented. And I'm going to show you a little bit about what I'm working behind the scene. Yeah, let's go. Alright, so here you can see all the execution that I just showed you in the video itself. And here is execution on the chart. And to find, here is a trade level. You can hide it. You can actually show it here. And I'm going to talk about these trades. So for me, they are not really scalping. For me, it's more like day trading within the section itself, because most of the trade I have a tendency to hold this around optimally 30 minutes, and the longest currently for my optimal timing is around 1 hour. So here you can see currently is live market condition, and I just make the video. Alright, so we start first. The market is opened around here, rally up here. The green zone right there is a key levels that I marked up and planned the trade before my live execution that you saw in the video. And my dominant bias for Asia section is breaking out to the upside. And for that reason, if somehow I see a counter trend trade, and if I took the trade, which is more risky, then obviously I will decrease my sizing and size smaller a little bit. And as you can see right here, I'm using one lot for my position. I have a two execution, one here and another up here. And eventually after the round 1, 2, 3, 4, 5, 6, around after 30 minutes, I close all the trade. And I close all the trade around this reason when price leaving the key level. One of the trigger that I use for this trade is actually just the RSI is a little bit overbought right there. And when it close below this, and I have another screen right there showing me a little bit on other indicator as well. And it's just simply a trade to targeting the daily open. And as you can see right here, the EMA's red line right there, 50 is actually acting as resistance. So but basically I'm just selling there, targets the daily open and the EMA 50. But eventually after 30 minutes and the trade is still running quite slow, that's the reason why I killed it. And then just on the second set of the trade, around the daily open, we can see the RSI is around over so, and we see multiple rejection at the EMA 50. So after just around 1, 2, 3, 4 candle, I have first execution here, I add another execution here, and after just around probably 1 hour, I close all my trade. Why I close all my trade instead of just holding with a dominant bias? Because that kind of almost 1 hour and we are heading to A0 open. So when A0 open, usually the candle going to be bigger ATR and the volume and everything is going to be a little bit different. So I got up all the trade, and the reason I get up all the trade right here is because I want to reassess my stop loss and TB and still the same sizing but different entry, and yeah, just want to see how markets behave. And eventually you can see that I got around one execution right there, another execution right there at better price. My daily target is around 1,000 and probably 1,100, and I'm done for the day. That means I need around 36 pip with with 2.5 lot. But eventually price trade really just massively to the upside. That's the reason why I actually travel the stop loss, and you can see in the video, I hold all the trade for 30 minutes, which is my optimal trade duration, and eventually I close the trade right there. Price still continue to move up, but I hit like 3x my daily target, which is, and the first target is around this zone right there, but price just break out, retest this, and just keep pushing. So that is the zone that I draw on higher time frame, means the key level, and just simple support resistance and the Fibonacci level. So, and I use RSI for trigger and EMA for visually seeing where I am in trending market or not. Now here is when you see the execution in live market, what you are actually seeing is just my shop as a trader, which is execution and stuff. But the real thing happened behind the scene when I marked up the kind of key level and repair for my dominant buyers, and my daily allowances was around 2%. That means I never allow myself to lose more than 2%. And within that kind of allowances, now I come to the market and my goal is around hitting that daily target that I set for myself. And if I hit my daily loss limit before that, I get out and I come back tomorrow. But as you can see, most of my trade right there, I use multiple entry. Most of my trade doesn't follow a positive risk reward structure. Most of my trade are not really one single entry, but I break down into multiple entry. Most of my trade are adding to losing position, and most of my trade have a kind of huge stop loss. But here is the most fascinating question. When we talk about risk rewards, there's one thing that we're not really talking much about, which is the actual risk versus the initial risk. The initial risk is your stop loss, but the actual risk is the opening and floating P&L that you saw during the line execution. Do you ever see my account and the profit and the P&L lot below like negative 500 or 1000, let alone 2%, which is 2000? And most of the trade just bouncing around and eventually turning into profit. So our shop is not really about going into the market and trade that setup or expect market to hit there and there. But what I am doing is, all right, today, here's my plan. Here is my risk allowances for the day. And what I need to do is this and this, and all the scenario is planned out. And I have a daily target in mind to allow myself to walk away when I hit that, or even I hold on a trade, I know where I feel comfortable to get out. So a lot of things already planned, and I come to the market and I just trade. And as you can see, the trade execution is almost perfect, to be honest. And not every day gonna be like this. I'm not telling you that I have a magic strategy or something, but it's more about execution. It's more about blending and just do your job and less the expectation and the ego behind the door, because you already have everything planned out. So you know what's coming, you know what you're doing, and you just trade. So with the like execution, now I want to talk about tight stop loss and like big stop loss. So that is just my personal perspective and experiences. We as human always have a different perspective, but this more just, yeah, just discussion. So tight stop loss usually result in lower win rate and less room for management, and I mean management to the downside, because with tight stop loss your entry is usually just single entry. And usually the lot size is already based on the stop loss itself. So the lot size is already kind of big. So adding to losing position could be very dangerous and really increase our risk exposure to a level where it can actually break our mental capacity, and from there a lot of downfall may happen. But in the upside, Thai stop loss actually could be more into the type of management where we can actually take partial or trailing stop. So that is the way to manage a Thai stop loss trade. And usually it's Thai stop loss. When we use Thai stop loss, obviously we want high risk reward ratio. And for me, high risk reward usually above 1 to 1. And usually people use 1 to 2, 1 to 3, and sometimes I saw people use 1 to 10, 1 to 20, but longer losing streak. So with 1 to 20, probably you will get like sometime maybe 20, 30, 40 losing streak in a row. So in theory, the risk reward thing can you still win less, but because you are winning big, so you may be still profitable. That is in theory. When you lose like 3 trades in a row, your psychology is already fucked up. Let alone like 10 trades or 20 trades. And if you are trading Thai stop up and buy into the idea of you can trade 1 to 4, 1 to 5, and really try to hit home run on every trade, you will hit home run, but not on every trade. And the problem when you got losing streak, it just break your mind, and your next execution is not gonna be equally good to the previous one. And if you got another loss, it just goes straight down. And your mental level, it doesn't matter how good you are. If you take too many hits, like you're gonna be dead inside. And even you are still okay with that and whatever, but mentally, no one actually built for that. So longer losing streak, that is something that very hard. That's the reason why doing Thai stop loss, usually we do less trade and usually single entry. And because we are doing less trade and single entry, it requires precision and patience. That's the reason why you need to really fine tune your strategy to a level where you know your hit rate is going to be high, your risk reward going to be good, and however you frame that is up to each person. But from here you can see that Thai stop loss, it is still possible, but it requires a lot of focus, patience, precision, and knowing what you are doing, and absolutely have a plan to control your drawdown. Because if you risking 2% per trade and you are using Thai stop loss and you allow yourself to trade like 5 times a day, you're basically gambling. Now we come to why stop loss. Obviously, we have a high win rate. We have a more room for management. Because with a bigger stop loss, you actually can break down your entry to multiple entry, and multiple entry allow you to DCA into a losing position. But because your stop loss is really big, I mean, it's like a standard stop loss where you cover a lot of key level, people retracement zone and stuff. So market usually have a tendency to bouncing back and forth. Sometimes it run really fast, but most of the time it's not that way. It usually come in a swing. So it allow wide stop loss, big stop loss, standard stop loss. It allow you to really manage your trade all the way down or on the way up, just like Thai stop loss as well. But the thing is, it's low risk reward, and sometimes it's negative risk reward, and it's less than 1 to 1. And are you okay with that? Because you may not winning big, but you are winning more often. And if your strike rate, your hit rate is good enough, you're good. And you never know until you try it. And why stop loss? It actually doesn't require you to be super precise in your entry because the nature of the itself doesn't require that. You may got into drawdown, but because your stop loss is reasonable good, market going back and forth, and it offer you a lot of opportunity to capitalize on this and manage your way out and still be profitable. When I say why stop loss allow you to be profitable with less precision and impulsiveness, it doesn't mean that you should trade with the the mindset of being reckless or being gambler, but it's more like you can be more comfortable trading and knowing that your stop loss is not that easy to be hit, and before it hit, you have your way to manage your trade out and knowing when to get out and limit your risk exposure, or when your bias is still when your premise is still correct, you have a confidence to add into a losing position and manage your way out. Even in break even or small profit, it is still a winning trade. I know it sounds kind of weird because right now on the internet on YouTube, the only it seems like the only way to trade is using really tight stop. And if you're trading with bigger stop loss, you are not smart. But like my episode one, this when I talk about this, I'm not really comparing because you can do either and still be profitable, and you can do either of this and you still can be losing. So it all begin with you and end with you. And my way to consistencies is all about me, and it end with me as well. So when I talk about this, I want to give you an option to really reconsider between the thing and how to place the stop loss correctly, because it's just all about low time framing, tight stop loss. And when I talk about why stop loss, it with low risk reward, I mean it usually has a low risk to reward. Sometimes if you got the right direction and market is just break down strongly, impulsively, you still can have a 1 to 2 and even 1 to 3. But they are not something that happen like regularly. That's the reason why I write low risk reward. And one of the strong thing about big stop loss or standard stop loss is that when market go against you, which is usually if not always does, because how many times you play your trade and market just go because you go full loss side into one position, and then when market go against you, you feel like hoping that it's gonna come back to break even, or hoping that just give me one chance and I will close the trades kind of stuff. But the why stop, it actually give you position to actually break out your trade. Even when you win, you may win little, but when it go against you, you actually have a chance to capitalize on that. I know it sounds controversial and it sounds like you're not doing the right thing, but break your entry to multiple entry when market go against you, you feel happy because you have another sizing going to come in. And in order to do so, please remember that you need to size your trade. Usually, it needs to be the right way. And for me personally, I size my trade equally because I break down my trade from single entry to like multiple entry, and I use like for example, if single entry I use 5 lot, then in single entry depend on the ATR, depend on the pair that I'm trading. I'm going to calculate the loss side in my personal way. It depend on my strategy and time framing as well, and I divide that 5 lot to multiple entry. I don't just if you 5 lot and you got to 5 resistance, that's totally wrong and not what I mean. So be careful and yeah, so fine tune your stop loss and maybe find a way between this. And I hope that you find your success. So next thing I want to say is The method is focused on your own journey. And you can see I got used to it, so I didn't really give a shit. But during my journey, not only as a trader, but only as a human being, the most beautiful human being that I met, they are not on social media. And even they don't have a thousand and famous follower and stuff. They just are. They're just being. And when they try to create content and help people, they got hate and they got a lot of really hurting comment to their way, and they just give up because not everyone is built for the thing. Not everyone have a capacity to share and give, even they really want to. But the world we are living in is kind of focusing on the trending things. What is a hot keyword? What is a hot strategy? What is a hot influencer? What is the hot movie and stuff? And they are all in one direction, that if you go against that and you share something that they never see before, or they got scammed by someone that's pretending to be you and stuff, they try to hurt you back. And a lot of people just give up on doing or practicing kindness. This is one of the reasons I do what I do, because even I'm not really where I want to be, but hopefully on my way there, I can spread some goodness and values along the way. Maybe it's not that good, but at least it's real, I guess. So we move on to the next thing. So that is the most important topic of this video. And if you're still watching, thank you for your time. And I'm going to make it right to the point as possible, because for me, true consistency, it is different to each individual, and it's our job to find that out, because there are a lot of nuance and there are a lot of small details that only appear when you spend time with your trades and your execution and your journaling and find out from there. So the first thing is your framing work. Every day we're gonna go to the market, and we may have a different buyers up and down. We may trade different pair. We may trade different section. But the most important thing is we got to approach the market the same way every day. For example, before I took the gold trade, I spent around 30 minutes to mark up the chart, the key level, and then I looking at silver to see the code, to see the direction of silver as well, because they usually have a little bit of correlation between the two. And then I looking at the RSIs on higher time framing. Then I looking at the price action, and then I marked out, and I from see things. It helped me to find the dominant buyers to repair for my trading. And after doing that, I got the dominant buyers for the easier section is bullish. So I focus more of my side on the bullish. And if I want to trade against the trend, I'm going to reduce the sizing and try to get out of the delta trend trade sooner compared to the trade that following the main trend and the dominant buyers. But for the best, usually I just focus on the trending. And my execution before I go into the market, it depends on the account. I have a daily goal. For example, if I have a let me show you. Here, that is an example of what I mean. As you can see right here, I am this just example. I don't want to show you a lot of stuff, and usually I don't show to anyone about the trading seed that I build. But this I'm going to show you. So my target to pass the challenge is around 2 weeks, which is 10 trading days. And because I am currently in drawdown, so I need around 11,500 to actually pass phase one. So if my target is within 2 weeks, then that means every day my yesterday my target for the day is around 1000 and 100s, but I got around 1003, so that is around more than I needed. So I know exactly that I can walk away. I don't need to trade that day anymore. And today you can see that my target it just need to be around still 1100, but because of the breakout I actually make 3 times my target. And so far 2 days, but I haven't really close to my daily limit, and I still manage my trade pretty well. And because today I winning big, so for around a trading day left, every day what I am aiming for is just around 900. So because today I do well, so the last 8 days of my plan, I can just every day I go there aiming for 900. I can actually aiming for more. If market give me more, that's good. But I am not forcing my trade like I used to. And I know that if I got 900 and market is showing me any sign of reversal, I get out. Why? Because that is what I needed, and that is a daily how powerful the daily goal can actually give you. It give you. It's not real. I used to think that it limits our ability to scale in or scale out or whatever, but it actually is the opposite. It actually gives you the clarity that knowing when to walk away, and knowing what is your sweet spot. The daily goal it doesn't really affecting my performance at all, because if I focus on the process, sometimes market give me more than I needed, and when I seize it visually, I make 3 times what I needed to pass the challenge within 2 weeks. So there's no point for me to actually keep trading today. I need to step away, because when market is too generous, it usually after your big win, you continue because you want more. As a trader, we have a habit to just keep pushing and pushing, and the social media just tell you to get rich quick, but you don't need that. If you slow down and write things down, give yourself a visual and treating this trading thing at a real business, you're gonna be surprised. That's really why I don't think in terms of risk reward anymore. I think in terms of doing business, I'm thinking in terms of putting a goal to something that I can achieve. And then I break down smaller part of it and I try to achieve it every day. So after 2 weeks, if I pass this account, I make the new objective and I follow the process at the same time. So I used to be like process oriented, but then I struggle a lot. And just a few days ago, when I finished this trading C, it gave me clarity. It gave me an idea of what I am going for, and know when you know what you're going, it doesn't hinder you. It actually gives you enough motivation to go there, and it gives you a destination to push for. And sometimes you push really hard, and then you look at this and you can see that you're doing way better than your original plan. So now you can just slow down and relax, and that's when you can take a break and recover your mental game. So that's it. I think the last 10 minutes were probably the best things that I consider is what you need to really upgrade your game. Most people they don't plan things out. Most people they don't have any idea of what they are doing. All they have is a setup. All they have is just simply trade. But when you really break things down and prepare for most of the scenario, when you the picture in your mind is so clear, you basically remove a lot of the unknown and you replace it with good habit. You replace it with a proven framework, and before you know it, you still focus on the process. But now you have a goal to achieve, and you know exactly what is the process is, and you know how to do it every day and every day, and you approach the market the same. And in the future, if you want to try swing trade, you want to invest, you also know how to plan things out as well. But that's starting with now. I mean, you need to have a picture of where you are going, where you are going, what you are aiming for. My goal could be different than yours, and yours could be different than mine. But I know that it really is a thing that I just show you. It I'm not going to share it because I I just I spend time to build it up, and I took some inspiration from other traders as well. But yeah, I think you need to do it yourself, because only then you can do it again and again and again, and then only then you will realize how powerful uh, focus on process, but also having a goal is actually amazing. And the two consistencies, it requires a lot, but it always start with you and it ends with you. There's no one holding a formula. There's no one has a secret to the market, and they are all marketing technique that trying to shut you in and make money from you. And I wish you nothing but the best. Happy trading, and I see you on the next episode.